Hi, and welcome to this week's look at the major news stories impacting the markets so far. And this week, we're going to take a look at the Hang Seng, and that's had a pretty tumultuous week. We're going to follow that up with looking at the price of gold, see what's been happening with that. And finally, third and fourth, we're going to take a look at a couple of different US equities and some rather contrasting fortunes for them this week. We'll start with the Hang Seng, and Tuesday saw that Hang Seng drop nearly 10% in market hours. That's the Hong Kong 50 at FXOpen. That's what you want to be looking for. And Tuesday's chart of the Hong Kong 50 showed the market fell almost 10% quite early on. Now, Reuters said that it was driven primarily by uncertain statements from Chinese officials regarding economic stimulus measures. Now, obviously, that's always of great concern for the Hang Seng. And it raised doubts about Beijing's ability to steer the world's second largest economy out of its most severe downturn since the COVID pandemic, and they're aiming to achieve 5% growth. Now, the decline may have also been accelerated by a cascade of long position closures. These positions were opened up in mid-September during sort of a fairly positive move for the markets. It does appear as though a lot of those were closed out, which obviously can exacerbate the issue. Let's take a look at the chart and what that shows us. Well, we're in an upward trend in blue, and that's still intact, although the price is certainly near that lower boundary that you can see. The price failed to hold above the 22,700 level, which could act as resistance in the future now if we can't get above that again. Support could be found at the psychological level of 20,000 and the September low near the 20,630 point mark. Now, it's possible the lower boundary of the blue channel and the support area between 20,000 and 20,630 could help bulls offset some of Tuesday's significant decline. However, for a sustainable continuation of an upward trend on the Hong Kong 50, the market is going to need see some clear evidence of economic stimulus from the Chinese authorities. At the time of recording, some losses have been offset slightly, with the Hong Kong 50 trading around approximately the 21,300 mark, but clearly we're going to need some clear information from those Chinese authorities to give us an idea of which way we're moving in the coming days. Okay, now on to gold, and the gold price has dropped to a 2-week low. Well, Tuesday also saw the price of gold fall, and that fell below the $2,610 per troy ounce level, and in fact a level we've not seen since the 20th of September. Our bearish sentiment has been driven by continuing strengthening of the US dollar. According to Trading Economics, it's mainly due to market participants lowering expectation of an aggressive rate cut by the Fed in the coming weeks. It's currently an 89% probability that the Fed will decide on a 25 basis points rate cut in November. There had been talk, of course, of a second 50 basis point cut, but that does seem to be easing slightly. Let's take a look at the chart. What does that show us? Well, the price is still within the upward channel, which you can see in blue. That began back in August 2024. However, the price has broken below the median line of the channel, and the price decline from the historic peak on the 26th of September is forming a descending channel, which we're showing in red, which could be considered a correction within the broader upward trend. $2,670 is showing signs of resistance, whilst the psychological level of $2,600 per troy ounce could well act as support moving forwards, as we saw during the bullish breakout in mid-September just a few weeks ago. But it's certainly possible the bulls will attempt to resume the upward trend using the area, which we've marked with an orange circle on the chart, created by the following support levels: the lower boundary of that blue channel, the red channel line, and that psychological level of $2,600. Now, at the time of recording, it's circa 2617, $2,617 to $2,618. So a little bit of volatility there. And whilst, gold is considered a safe haven, there is absolutely no harm in making sure your risk management techniques are spot on. Okay, now to cross the pond, as we say, and take a look at something in America and a couple of equities. And we're going to start with Microsoft. And Microsoft shares have dropped over 3% this month. Now, since the start of the month, October obviously, whilst the NASDAQ 100 or US Tech 100 FXOpen is in positive territory, Microsoft shares have underperformed. On the 1st of October, the opening price for a Microsoft share was $427.47. By Tuesday's close, that was down by more than 3%. One of the key drivers is analysis from Oppenheimer, suggesting that Microsoft's financial performance may be negatively impacted by losses related to OpenAI. Obviously, AI has been a major driver of the markets for a while, so losses arising from it. Perhaps we're seeing a slight change in philosophy. They also, Oppenheimer has downgraded the stock rating, and that's pretty concerning ahead of the upcoming third quarter earnings season. We take a look at the chart. What does that show us? Well, the price is hovering around a critical support zone formed by the lower boundary of the upward channel that's been in place since early 2024, which we can see in blue, and the psychological level of $400 per share. So, what next? Well, if we take a bullish outlook, the price may reverse upwards from this support zone. Tuesday's candle indicates a potential increase in demand, so we could see that reversal. Take a bearish outlook, however, the median line of the blue channel has acted as a resistance, and we've got an arrow there indicating that. And it's possible the next level where the bears could confirm control is the former support at the $425 per share level. But probably most importantly will be the earnings report, which is due on the 22nd of October. That obviously will give us a much clearer idea and see what these AI losses are actually like. Well, pre-market on Thursday, the share price is circa $417.50. So again, sort of holding firm. I do think those quarterly results are going to be key. Okay, finally, and we're going to stick with US equity again, and this time it's Netflix. And as I said in my introduction, contrasting fortunes to Microsoft in the fact that Netflix has reached an all-time high this week. Wednesday's trading session saw the Netflix price exceed $725 per share. That is an all-time high. Bullish sentiment is being driven by the upcoming earnings report, which is due on the 17th of October, so a little contrary to Microsoft. Now, according to Zacks analyst forecasts, EPS or earnings per share is expected to reach $5.07. That's up 35.92% compared to 12 months ago. So that's up year on year. Gross revenue forecast is $9.76 billion. That's up 14.31% year on year. So expectations looking pretty positive. Let's take a look at the chart. What does that show us? Well, the price is moving in the upward channel, that's in blue, and has been since the start of 2024. Specifically, the price made a convincing recovery after that panic-driven sell-off around the 5th of August that we saw. Now, the median line acted as support. We're showing that again with an arrow. And since mid-September, the price has remained in the upper quarter of the blue channel. Psychological level of $700 showed resistance in late August, and the price is now firmly above this. Now, all that would suggest strong buying pressure. However, that earnings report is looming. If the actual figures come in below expectations, a significant correction could be possible, maybe past that median line of the channel, or certainly to it. Again, it all comes down to expectations and actual figures. Analysts are remaining pretty optimistic, at least cautiously so, with TipRank stating out of 37 analysts they surveyed, 25 recommended buying the stock and only 2 recommended selling. And they've got an average price target of $720. That's the average price target for the next 12 months. So we are slightly above that at the moment, but certainly, would indicate not a huge fall looming in terms of analyst expectations. Well, pre-market Thursday was around the circa $725 to $726 per share. So maintaining ourselves above that 725 level. Again, a lot can change. Those figures are going to be very, very important. Don't forget your risk management techniques, and we wish you luck with your trading in the week ahead. Bye for now.